First of all, I'd like to thank the organizers as well. Really appreciate organizing such an activity. I believe the first in this important subject of non-financial risks, of governance, risk, and compliance. So let me start by talking about risk and the link to cybersecurity. So traditional risks that we, working in a bank, that we are used to monitoring and managing are credit, liquidity, market risks. So over the last 30 years, Basel regulators were focused on these traditional risks, what we call financial risks. We have enhanced our models, the way we do business. A lot of focus was there. However, in the last 10 to 15 years, there's been a lot of emphasis on operational risks and events such as fraud, internal fraud, external fraud, and cyber and information security is part of operational risk. And this has caught a lot of attention and traction. Organization. And what we did recently in the past year, we established a security and technology risk department in the risk group to independently monitor cyber risks, establish the policies. And I believe this model has worked pretty well for CIB. The challenge, of course, was getting the talent, the experienced talent from the cyberspace. So what we were fortunate enough to do was we did have people come in from the first line in the organization and outside the organization and join us to build a strong risk infrastructure. This actually, like I said, turned out to be a good hybrid organization because it enhanced our risk monitoring. We had the right talent to challenge the first line. We had very strong risk control self-assessments, which were done by industry experts. So it enhanced our risk controls as well. So it added a lot of benefits. However, my colleagues in their institutions, they have a different model. And there's not one perfect model. I think various institutions have various models that work for us, that work for them. Now, I was also asked to talk a little bit about risk appetite. So I'm going to just make a general statement on risk appetite. As you know, especially banks, there's been a lot of emphasis in the last 5 years to have risk appetite statements, risk appetite frameworks. What is risk appetite? And it applies to any business. It could apply to a bank, it could apply to an organization. These are your target risk levels to achieve your strategy. So if you have a business strategy, you have to set how much target risk levels you're willing to take. In any business, in any investment, in any transaction, there's going to be risk. We're in the business of risk, whether you're in the private sector, public sector, or a multinational. So you have to set these levels. Traditionally, it's been quite easy to set at the board level for financial risk. So credit risk, you can use the default ratio. For market risk, you can use your liquidity ratios. For operational risk, you can look at a number of losses. However, the challenge for us in CIB was how do we set risk appetite for cyber risk and information security risk losses? So we wanted something that is tangible, that can be understood by the board. So what we did in CIB, we looked at, in Egypt, there is not much data available in historical events and cyber losses. However, what we did is we subscribed to an international database, and we sort of understood what type of risks were coming out from different regions and modeled them based on historical losses. Even though the losses were not in Egypt, but we were able to model them and come up with some sort of projection, potential loss, and somewhat set that to our risk appetite statement. Basically connecting a quantitative model to what is your target level or your threshold to take such a loss. So at this note, I'm going to pass it to Mr. Ayman, and I think he has very interesting topics to talk about. Thank you.